Hey guys, so this video is going to place a very interesting perspective on market structure. And I know I've made a video about market structure before, but this one I think will be a hidden gem that most people or some people will never really talk to you about. So basically, this video is going to be about strong and weak structure. I know it sounds like some made up thing, like what is strong and weak structure? Structure is structure, right? But at the end of the day, we make up words to simplify processes that already exist within the markets. So what I'll be showing you today is how to identify strong and weak structure intraday and why it's important. So we're going to take a look at this example here, this market structure shift example here I have with just a line chart. The reason we're going to do rudimentary examples is because it's going to translate directly into the candlesticks. So we have a high here, a low here, a lower high here, a lower low here. Now, where's the strong structure? The strong structure is the highs, right? Because the highs jobs is to create lower lows, right? The lows are weak because why? They can't create higher highs. So the lows are weak, right? So we have a lower low, a lower high. That's the strong structure. So the low is weak because it could create a higher high. So it gets taken. Same process, gets taken. Now, right here, wait, right here is interesting. This is a market structure shift. This is when weak structure turns into strong structure and strong structure becomes weak structure, aka protected or unprotected structure. So this low, right, it got taken, right? And this high was strong. But immediately when price breaks that high, right? Now this low becomes strong and that high becomes weak. And now subsequently, what do we see here? This high can't create a lower low, so this high gets taken. So this high is weak, right? So let's translate this directly to the charts here. So right here, I have the 15-minute time frame pulled up. Why do I have the 15-minute time frame pulled up? Well, because the 15-minute time frame is what we use to monitor, aka hold or trades 15-minute and 1 hour interchangeably. So let's say we go down to our 5-minute or entry time frame. This is what we would see, right? I already marked everything up. All right. We see a high, a low, high, a low, a high, a lower low, right? And what do we see here? A market structure shift, right? Because what do we do? What do we do here? We go from this, this, right, to a higher high. Now, what does this become, right? Becomes a weak high. This becomes a weak high as well. Why? Because it could create a lower low. So what do we see now? Weak low or strong low because it created a higher high, strong or weak high because it could have created a lower low, strong low because it created a higher high, weak high because it could have created a lower low. You see the same thing happening over and over again, right? Let's bring up another example here. And this time we're going to use the 15-minute time frame since that is what you would be using to monitor your trade. All right, let's go to the 15-minute time frame. See a low, a high, a lower low, right? A higher high. So what did this become? A market structure shift, right? So let's draw it out here. Market structure shift. Now, this high becomes weak. Why? Because it could create a lower low, right? So that's our next target. All right. And now this is just an explosion upwards, but you get the point, right? Let's keep marking this out. All right, because I really want you to get this. Okay. All right, what do we have here? Okay. So we have a high, a low, a higher low. This high becomes weak. Why? Well, I'm going to give you a second to answer that question. Why does this high become weak? Because We took this high and we could not create a lower low here, meaning it couldn't complete its job. It will get taken. Okay. Create a higher high. Now, why is this high weak? I'll give you another second to answer that question. Could it create a lower low, right? High. And what happens here? We take this low, right? We take this low right about here. So now this high becomes strong and this low will get taken. And now you have a market structure shift and now price goes where? Down. So this is how you utilize this to monitor your trades. I'll give you one more example here and really mark this out in your chart and tell me, does this not make logical sense? So I'm on the 15-minute time frame here. Okay, we have a low, a high, a lower low, a lower high, a lower low. Now look at here. This move could have probably gotten people confused. Why? Because it was an impulse move. But I want you to take a look here. From this range high to this range low, we mark out our fib. What does it hit? OTE perfectly, right? Can't displace. But not only that, using strong and weak structure, if we have this high here, this low, this lower high, this lower low here, price needs to break this high for us to be bullish. Well, it couldn't, right? So immediately, this low is weak because it couldn't complete its job. So it will get taken. And what happens? It gets taken. Does that make sense? I want you guys to really mark this out in your charts and you'll really start to see your trades explode into the direction you want it to go just by simply marking structure in a way that you've never really been taught before. We understand highs and lows, but I want you to understand what structure is supposed to do. A low is supposed to create a higher high, a high is supposed to create a lower low. If it can't do that, it will get taken. That's it for the day, guys. Hope you enjoy it.